Business investment falls. Let's have a look. Good evening, everyone. Florian Heise here, and welcome to another episode of Heise Says. I've got my evening stein of coffee, and I thought we would have a look at this article from the ABC. It's about the data that was released today from the ABS, private capital, new capex expenditure, essentially business investment. So let's have a look, because our governor, our treasurer, they're all hoping, well, particularly our Reserve Bank governor, is pushing for business investment and business to drive up wages, invest more in their staff. You know, because interest rates are so low on home loans. Is it the same in business? And we'll look actually at another article a bit later in another video about some of the issues with small business lending. I know as a small business person, just getting a mortgage is a nightmare, let alone a loan to expand your business. So business investment falls again despite tumbling borrowing costs, and this is written by Stephen Leitz. Despite tumbling borrowing costs and promises of interest rates will stay at a historic low for the foreseeable future, Australian business continues to show a reluctance to invest in itself. Well, I can't say I'm surprised if we jump and have a look. I mean, consumer confidence is down, and this is the Westpac data as well. The Roy Morgan data is down there too. We saw that this morning. I'm not surprised. Private sector capital expenditure fell again over the September quarter, both in trend, negative 0.6%, and seasonally adjusted, negative 2% terms. The consensus forecast had been investment would finally pick up over the quarter, spurred on by the Reserve Bank's rate cutting engine. Why are they getting everything wrong all the time, guys? Why is the consensus... Yeah, I mean, honestly, who would take a loan now for business investment? I would assume you'd wait until the beginning of next year just to see how things are going. See how this trade deal goes with China and the US before jumping in. The weak spending follows a 0.8% decline over the June quarter. Overall business investment is 1.5% lower compared to a year ago. So why are people predicting growth in the future? Where's that coming from? Where are their models basing this on? This doesn't fill me with confidence. Does this fill you with confidence, guys? Let me know in the comments. If you're in business, have you gone out and borrowed and invested in your business recently, or are you holding off? I know when I made the mistake of, signed a big contract, and over Christmas I invested in, several new workstations to, ramp up another arm of the business. And then over the beginning of the year after, that contract fell through, disappeared. So I was stuck with all this equipment that I had invested to. I was probably a little bit too eager. And you live and learn. You live and learn doing that in business. I was doing my part for the economy. I tell you, I would not do that now. Not at all. That's one of the reasons why I literally have 6 computer screens in front of me, guys, at my workstation. So it's not going to waste. But it was probably a bit rushed. So the fourth estimate of forward-looking expected spending for the year rose by 2.5% to $117 billion. However, this too was lower than the consensus forecast and implied slight softening of investment intentions. The RBA are likely to be disappointed with this report, ANZ's Felicity Emmett said. Well, yes, they certainly are, because they are hoping this, there'll be more investment. I just don't think the confidence is there. I think the rate cuts have been too drastic. And particularly if we look at construction sector, building approvals have been trending down, guys. There's been a slight pickup. We saw yesterday construction work completed in a previous video too, how that is trending down. It's dropped, 8% on the year? So if the cut to investment plans eventuates, it will weigh on the recovery in growth, eventually flowing through to a weaker labour market, Ms. Emmett said. The pickup in intentions was also entirely driven by a rebound in confidence and conditions among miners. Ooh boy, that is not good, because that is dependent on overseas demand. Spending expectations in mining jumped by 15% over the quarter, while remaining relatively flat in manufacturing and in decline across the services sector. So a GDP drag. IFM economist Alex Joyner said the softer than expected results was driven by a pullback in machinery and equipment spending, centered in the services sector. There were some modest revisions higher in the CapEx spending in the fourth estimate. The estimate was taken in October-November. It seems clear that it is too early for businesses to respond to lower rates, if they intend to at all, Dr. Joyner said. The fall in CapEx will put further pressure on next week's GDP figures, with retail volumes and construction work down over the quarter, with only net exports so far adding to growth. RBC's Robert Thompson said the survey was weak well beyond the headline figure and likely cause a downward revision in GDP forecast. Well, headline spending came in at negative 0.2%, with the weakness concentrated in plant and equipment, negative 3.5%, which is the component that maps best to a key component of business investment in GDP due next Wednesday, Mr. Thompson said. Overall, the weak investment cycle continues, reflecting a multitude of factors: tepid demand, weak confidence amid high global trade concerns, and in line with global capex cycle. So here we have, what's this, quarterly, seasonally adjusted by sector. Mining is orange, manufacturing is blue, and once again I'm tracing over a black picture with a blue highlighter. I'm wondering why it's working. So here we go. We've got mining was, here we go. Yeah, well, see this? Here about 2011? That's when we started our practice. We worked on a whole lot of mining projects. So I'm not surprised that that's tailed off. That's, yeah, down to 2016. Have a look here. Other selected industries down. Manufacturing, I mean, yeah, it's been pretty low for a while. But look at that mining jump. Look at that. Look at that. And that is what they're hoping will be good. Guys, which are you involved in any of these sectors? Let us know in the comments how, if you've noticed this. So I'm seeing just in the previous video I did, people are saying how, you know, they've had to let people go or businesses slow down depending on what sector they're in. Let's jump over and have a look at the data from the ABS. So this is the, I'll link to it on the references below, guys. If ever you want any of the references, I always put them on the pinned link there, so it's easier to get to. So preliminary estimates driven from a sample survey of private businesses. Contains estimates of actual and expected new capital expenditure by type of assets, new buildings and other structures, equipment, plant and machinery, and by selected Australian and New Zealand standard industrial classification industries. These statistics are expressed in current prices and chain volume measures, in original, seasonally adjusted and trend terms, and are available for Australia and by state or territory. Let's have a look at the main features. What do we have here? Total new capital expenditure for the quarter, September 2019, and it's down from the one quarter to the next, and it's down 1.5% for the year. Buildings and structure down 2.9% in the year. Equipment, plant, machinery slightly up in the year, but down in the month. Seasonally adjusted, down, down, down. And new capital expenditure in volume terms, I mean, there you go. How's that trending? That's not looking too good. That's not looking too good. So let's jump to look at it in volume terms. I mean, here we go. The trend estimates for total new capital expenditure fell 0.6% in the September quarter 2019. The seasonally adjusted estimates for total new capital expenditure fell 0.2% in the September quarter 2019. There's the trend, there's seasonally adjusted. Building and structures, there's the trend, there's seasonally adjusted. I'm going to have a look, guys. The economy's going fantastic. Oh, wait, I'll zoom in so you can see it. How's that? I mean, look at that. Look how it's going. Maybe this is why, since the GFC... Well, no, we had that spike. It's just gone down since September 2014. Here we go, have a look. Plant, equipment and machinery. Trending up, heading down. Mining. And that's what they're talking about. when you look at it on this chart, manufacturing all over the place. And these have different values too. Other selected industries trending down. So there you are, guys. Investment is down. What do you reckon? How do you think the RBA will respond to this? Do you think we'll head towards that magic 0.25 quantitative easing rate faster than anticipated? Is this going to be another unexpected outcome for the economy? Let me know your thoughts and opinions in the comments below. If you like the content, please share it with your friends and family and discuss it at your next barbecue. Did anyone go to, what do we have? Isn't it Black Friday sales or something happening? Is that even an Australian thing? Why am I seeing that in the Australian media? Why? Is anyone else seeing that? I guess, I like it because I get computer games cheap, which is great. I bought Far Cry 5, so I'm happy, but yeah, anyway. So please share the content. If you enjoy my videos and want to help me produce more, I have Patreon where you can make a small monthly donation. I've got Amazon and eBay affiliate links. That's where I receive a small commission if you use the link. It doesn't cost you a cent. It's a great way for you to support creators if you use those services. It doesn't cost you anything. And then finally, I've got PayPal or Ethereum if you want to make a donation that way. Thank you all very much for your support. We really appreciate it. And I will see you all again later. Take care, guys.